Well, the market continues to rocket higher as the S&P 500 and NASDAQ both close at the high of the session, while the Dow, well, it shook off that early Boeing jitters, if you will. Oil, there was some profit taking there, but overall the big blue chip index was able to spurt a little higher into the close. It's the Russell 2000. Those are those small cap names that finished at yet another all-time high. Part of that momentum came from more signs that the economy is picking up. Productivity is surging really after 3 consecutive sequential declines. While the 3.1 headline reading was less than a 3.3 consensus, wages, they continue to come on strong, particularly in these last couple of quarters. More signs of anticipation that the economy is going to soar, which gives, of course, the economy a great chance of actually soaring. Then there's the IBD TIPP Economic Optimism Index. It surged to a 10-year high. The reading of 54.8 from, this December, by the way. That's from 41.4 in November. That's a gargantuan move to the upside. You know, it's interesting because that reading, the highest reading for this report goes back to March of 2002. Remember, that was just 6 months after the 9/11 attacks when the nation really rallied together in a manner that probably hadn't been seen for a generation before that. So American optimism about the economy 6 months from now also increasing, even at a faster pace. And don't look now, but maybe the restaurant recession is over. Dave & Buster's blew away Wall Street. Same-store sales were up huge. The stock, well, first of all, same-store sales 5.9%. The street was looking for a lot less than that, and the earnings of 25% also blew away the street. You can see right now the stock is surging to the upside. I gave you that stock last year at 35 bucks. In the meantime, I'm saying that Donald Trump is inheriting a nice ripple, and I think he's going to turn it into a tidal wave of prosperity. Here to discuss, Stephanie Pomboy. Stephanie, welcome to the show.
Thank you so much for having me.
All right, so you do some deep, heavy economic deep diving, and you're not as convinced as I am that the economy has a little bit of oomph to it right now.
Yeah, I mean, I guess coming into the election, I was tracking a number of indicators that the economy was actually headed toward recession, if not already in one. For example, personal tax receipts were showing no growth, which was a recessionary indication. You had a turn in the credit cycle pretty clearly, with delinquency rates rising from everything from, you know, the corporate sector and not just energy, but outside the energy space, as well as obviously subprime autos. We're all familiar with that. But also home equity loans were starting to see rising.
Well, they weren't near the danger zone areas, right? Maybe student loans are somewhere, and
right.
That's a question mark because we don't know how that's going to impact us.
Right.
They've never been over $1 trillion before.
No, and I guess it's not that the delinquency rates are so elevated now. It's just that the credit cycle had clearly turned, and we were kind of starting that path toward upward delinquency rates. You also had indications of distressed borrowing where, for example, consumers are starting to charge more on their credit cards after years of kind of resisting that impulse after the housing bubble bust. And as they were taking on more balances, they weren't using that money to increase their discretionary expenditure, which is really unusual.
So what do you think they were doing with that extra money borrowing then?
I think a lot of this comes back to they were paying bills, and I put a lot of the blame on the Obamacare. If you look at the increase in health care expenditures at the personal level, it's been just an absolute parabola, and it's taking a lot of money out of people's discretionary purchasing power.
So with all those things that you've just described, and what we've seen, though, over the last 3 weeks, perhaps even the 3 weeks before then, could there be a change? Could there be a change of foot? I'm calling it animal spirits. I see it, I sense it, I'm seeing it anecdotally, I'm seeing it in economic data that changes your mind with respect to maybe not as going into a recession or being in a recession, but maybe hitting an inflection point.
Well, I have to confess that I've had this kind of dour view about the U.S. consumer for a long time because I felt that after the housing bubble burst, they fundamentally changed their attitudes about saving and debt, and that was going to restrain spending, and the market seemed to be anticipating a return to the conspicuous consumption ways. When I was pressed on that for years as to what would change my view, my answer was always pro-growth business policies that put more money in people's pockets in form of income.
Well, it's here, Stephanie. It's here. All right. Thank you very much. Really appreciate your first time on the show. We appreciate it.